Okay, hello and welcome everyone. This is Beyond the Greeks, the research live stream we're doing every week on Tuesdays. I'm joined here with Amy Caldoun, and then we do this every week. We do this in a way that is meant to introduce maybe on the more research heavy side, but some strategies, some ways that you can trade options. Could be on Panoptic, could be in Deribit, could be anywhere. But the key point is that we want to share some of our research with the persons behind the person behind the research itself. So here with Amy, how are you doing today, Amy?
Hi, hello guys. Very well, thank you. How are you, Guillaume?
Yes, very good. It's chilly. I went outside with like short sleeve, and now I had to put a. They gave me a Harvard Blockchain Club conference, but yeah, I had to put a sweater. I don't know how it is for you in Paris.
It's very sunny today, very warm. There's a lot of, as we talked about last time, a lot of pollen. So I've been sneezing all day, but yeah,
Oh my god.
it's so far so good. I'm leaving today, so I can't wait going to
Yeah,
Serbia.
everything that comes with spring is again. I'm a new homeowner, so there's new things to do every week or weekend. It seems, but yes, pollen. We have beautiful flowers, but for a while it was very very heavy. We had this weird caterpillar. I wouldn't say infestations, but there's a lot of them. They hang from trees. It's like a spider web. Like we have trees. The canopy is like 20 feet up, but then
Oh,
right
I've
at
never
face
seen one of
level.
those.
No,
Never
I know.
seen a caterpillar in my
Right?
life.
It's not invasive. It's common. It's like making moths, but then for some reason they went all out over the weekend. It was grossed up. Like the kids can go outside because of the caterpillars raining from the sky. I think some cities do spray for them, and it can be kind of yucky to have this maybe like in a big city or public parks. But
Well,
yes,
still better than rats in Paris.
no, I that's right. Bigger beasts. It's like canker worms. It's like very tiny, but yes, it feels gross. And I yeah.
Yeah.
Anyways, nothing is gross about research. Nothing is gross about
No.
options. So maybe before we get started, yeah, can you introduce the topic a little bit? And then again, it's in the title, but yeah.
Yeah, so today I'm gonna walk you through our research on two bullish strategies, so short inputs and long in calls. Last time we did bearish and bullish on base, and before that we did only bearish. So
A good
that's the last.
balance.
Yeah, so that's the last one. It's on Ethereum blockchain, obviously, and yeah, so it's gonna be the same thing. We're gonna use the Panoptic protocol and explore how these strategies behave under different market conditions and the role of rolling frequency as well and risk reward trade off.
Interesting. Yeah, the you can be bullish or bearish or even neutral. It's up to you. But even that initial assumption has different strategies to it. So setting a put and buying calls are definitely the easiest trades to implement, which is one leg. I'm excited about this too. Again, the previous back test for bearish trades was the reverse: buying puts or setting calls.
Yeah.
But it was a bit surprising to me. But the buying of the puts was more profitable, and then I figured it's because the cost of the options were lower more generally on Panoptic. We're kind of opening up this short side of an LP position. That case meant that buying was advantageous, which is not something you see often in TradFi because the markets are a bit more efficient. So yes, I'm also excited about this presentation as well. So all right, so yeah, I'll be the one managing the slide. But yeah, let me know, and then yeah, you
Mhm.
can take it away.
Yeah. Okay. So let's do it. Also, one thing I'm gonna also talk about the results of the bearish ones in the beginning, just like to have an idea, a little refresh the memory about like a little comparison, let's say, between those two results because it's gonna be it's on the same period. So the backtesting period is the same for bullish and for bearish. So it just makes sense to see.
And then we probably show like four strategies. There might be one or two that outperform. Of course, what we say is not financial advice, but this is just for informational and research purposes. But it is definitely something that I have no idea about. We just had to do the back testing, kind of the approach that we're getting. So yeah, very cool.
Yeah. All right, so let's begin with a quick overview. So, what is a short put and what is a long call? So, short put provides downside protection to others in exchange for yield that you earn, which is Dreamia, as long as ETH remains. So, ETH, it's the coin that the asset that we're using for our backtest, as always. So yeah, as long as ETH remains within or above the strike range, it performs well in flat or mildly bullish markets by generating consistent income. The problem is that it carries significant risk, especially if ETH crashes below the range, as in this case, losses can grow very much quickly. On the other hand, the long call is a directional bet on ETH appreciation. So you pay a continuous premium to maintain the position and profit if ETH rises into or beyond the defined upper range. The downside is fully capped in this case at the total streaming that it's paid, making it a very defined risk strategy that benefits strongly from bullish momentum. So that's for a little overview. We can move to this next slide. So here to contextualize the performance, we analyzed these strategies over ETH price, as I said, from January 2024 to February 2025. We used the WETH USDC 30 BPS pool of Uniswap to be exact. And both strategies were structured as 30 delta options, which approximate out the money options. And here we can see that as far as like ETH price goes, we observe like strong rallies in the around March, also in November. In 2024, we have a sharp 33% drawdown between January and March 2025. And March is just the beginning. It's just like the 1st of March. So
Yeah,
the
I'm,
end.
I'm not a technical analysis type of guy, but we started a year and a few months ago at around 2200. We're back to 2200. So this is kind of going a round trip, but it definitely is
Exactly.
on the uh, bullish side. The price went up and up and up and down and up, but then it reverted, never went below that much. So I could imagine that the puts now will not be tested as much. That's another kind of things to look at because the 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 trend is kind of a little bit upswings, downswings, but it's very very stable. So there's nothing. I mean, there's a few questions. We'll see, but yeah.
Yeah, so it's a little bit ideal also for testing the resilience and the reward like potential of both strategies, because we have this like we just want to see like the reaction to bullish momentum and also the downside corrections eventually. So yeah, and as I said, it's the same period that we use for the bearish strategies that I presented 3 weeks ago, I think. So yeah, and on the other hand, we also like when it comes to strategies, we implemented two rolling schedules, just as always, the weekly and the monthly ones to rebalance positions, and we computed their accumulated net returns, their premia, and their payoffs. So moving to the next slide. So yeah, so this is the results for
Let's get
the
the one about. Did you want to go over the previous results? All right. Yeah, I made a skip
yeah.
one. Okay.
I think I have like a little, it's lagging a bit. Like it's moving. I don't know if
Oh,
it moves it in your
oh,
side, but it's
oh.
moving on my side.
Okay. Let me know. So we can go to the results right away. So
Yeah. So I mean, oh, okay. Yeah. Let's do this. Okay. So here for the bullish strategies results. So for the long call, with monthly rolling, we see like sharp return spike, most notably in February 2025, when there's like a gain over plus 20% in a single month, which culminate in like a plus 24.3% in cumulative returns. This payoff also aligned with the ETH prices that we saw previously. The blue line shows the premium cost, so consistently negative for the long call, obviously, because you're buying the option. And so it's reaching minus 50%, but it's clearly like outweighed by the green line, which shows the payoff movement from the price movement. In the weekly versions, while the cumulative return was lower at around plus 5%, let's say, the returns profile is kind of smoother, and the premium cost at the end was reached minus 60% almost. So here we can say that just the strategy tracks more the market direction a little bit more responsively. I don't know what you think.
Interesting.
Yeah.
Yeah, the I mean the different lines tell each tell a different story, but in each chart, the blue is what you pay or get paid as a premium, and seems to be fairly consistent across the
Mm,
whole period. Yes, the price moved, but that strategy placed it in range the whole time. So you can imagine that the 1 year cost of buying call options about 50%, and this is of the notional value, right, of the amount that you deposit. So and then the 1 year ish kind of return you get is kind of maybe 40 or 50% for selling. So this is kind of given. It seems to be constant, and that's kind of what we get. But yeah, the final return with the pink line does include the price moves, the fact that you have to rebalance, maybe sell some on the downside. So the weekly rebalance, weekly rolling are almost kind of going back to zero, and the line also don't fluctuate as much. It's the monthly one which I think kind of tells
exactly.
a slightly more kind of maybe stark story. The monthly call that you roll every month has a lot more P&L variability than the ones that you
Yeah.
see rolled every week. So that's an
Yeah.
interesting one, and the calls definitely make 10 net 24% on the top right, and the puts lose 21%, which is kind of
Yeah.
interesting. But yeah,
Yeah, so here the best rolling frequency for long call is the monthly one. Like we have we go the net returns goes from almost 5% to 24%, which is pretty much huge, and it minimizes also the obviously the cost of the premia, because it's you only buying, it's not weekly, but it's on the monthly basis. And after that you also have the payoff that increased by almost 10%. So yeah, it's
and
interesting, this frequency rolling, right? Like you don't have to analyze this, you don't have to like find like an alpha, you don't have to do any further
yeah, it's very
mathematical modeling.
mechanical, and maybe
Exactly.
the is the weekly rolling considering a shorter or a narrower option, or both of them have the same width?
Both of them have the same one.
Yeah, okay, so this is also similar to the when you trade, if you buy an option or maybe sell an option that expires in 15 days, if you wait 15 days, that's the point it expires, but it's very risky the longer you hold. And I
Exactly.
would imagine that this is a perpetual option, but you have a similar time scale as well. If you are handling a monthly option and you wait a full month, then you may be out of range and you may have a higher likelihood of leaving that range and stop getting paid. And this is what we see maybe in the two premia collected, and that helps to maybe manage a bit early. And then maybe the weekly might be a bit too aggressive, but it does show that it reduces the losses quite handily. So I would say that the time scales that we have, even if you do a daily option or weekly option on Panoptic, it's good to manage that early and maybe secure the wins, and then maybe kind of rebalance and stay in range more frequently. So yeah, this is very very interesting, and there's definitely a huge P&L spike over the past few months, definitely from the price going up. But yeah, so
Yeah.
that's might be a good thing to remember. The time scale is for the whole trade to realize itself, but if you can manage it early, you can also remove some of these losses.
Exactly. Yeah. So yeah, here we have like a more like a weekly and monthly decomposition of the returns that we have seen before. So here, the long call with monthly roll-in has like strong, like it peaks at plus 24% at some point at the end of like in February, while the weekly roll-in, I want to say that it stabilizes returns, but like lowers the upside a little bit. What do you think?
Yeah, it's a
Or
trade-off.
the
I would also
Yeah,
say that if you're trading a monthly option, the range means that yes, you can leave the range, but if you manage early, you may not kick into that high delta region of kind of up to the right, and this is fine. You do have less variability versus maybe more consistent results.
Mm.
Um, I would not advocate for this, but if you were to roll every day, for instance, this curve would be much smoother. You would still see these huge spikes, perhaps.
Like, yeah.
Most upside moves or downside moves happen within a few hours, anyways. But if you roll, you kind of net or capture that new price, realize your gains, and then move to the next one. So yeah, it's interesting. I would say that the slightly more active reduces P&L risk, if you will, P&L variability.
Yeah, exactly. Yeah, so here for the short put, we have like the strategy definitely suffers like from deep losses, as we can see as volatility moves. So we have like around minus 22% in a single month for monthly roll-in, and a little bit less for the weekly one, so around minus 15, I would say, the maximum. But like it's, despite it all, it's still like earn fees consistently. And so yeah, I mean the difference here is in kind of the payoff sensitivity. So I would say the long calls benefits from ETH trends, while short puts are more fragile when volatility spikes down.
Yeah, and this is the story of even TradFi options. The potential
Yeah.
for unlimited risk for setting up put options could be scary to many and does wreck your P&L when it moves against you. But
Mm.
yeah, this is what I would expect. And maybe let's go back to the final, or maybe not going back. Let's see. Yeah, the charts maybe also tell a very similar
Y-
story, but
uh, yeah, so I didn't put the charts because I didn't want it to be
yes,
overcrowded. Maybe
but
I should have.
no, but
Uh,
that's fine. Yeah, I would say
but
the yeah
what? Yes,
the P. Mhm.
what I added was just like some like some just like the conclusions. There's like a summary of
Yeah,
you
sure.
can go back. No, not here. For the bearish one, you can. It's, I think it's slide 4,
Yeah,
maybe.
this one. There we go. Yes.
Perfect. So yeah, so here we can see. So the long put monthly rule delivered up to plus 20%. And so this is at the end of the back test, the plus 20%. During ETH crashes. So this is for, as I said, for the same period from January 2024 up to the end of February 2025. So we still see positive returns, like for the long put. So for the bullish one, the call, it was plus 24, and here the long put was plus 20%. And the short call, we had like a steady from 2 to 4% monthly gains, but we had very much like a big crashes, so around minus 40% for the same period. So that's the maximum loss that we had. Whereas in the bullish one, the maximum was around minus 15, if I recall quickly.
Yeah, we
Yeah.
have the a similar table. I like these tables as well, but yeah, it kind of
Oh, yeah.
summarizes
Oh,
probably the
okay. Yeah. So yeah,
the
this
result.
is,
Yes.
yeah, it's better than like find kind of searching it in my
Yes.
head. So yeah, this is a perfect conclusion for the bullish strategies. So it's the same directional bet. The long call more strong in the bullish momentum, and the best roll in for short put is weekly. For the long call is monthly. We have the same thing, right? Like even with the bearish one, it's the same structure. We're looking for the best ruling frequency. We're looking for the max risk, the max losses in the back test, but also the max return in the back test. So here I analyze them to have like a general idea, because for the either for the risk or for the return, since the best rolling frequency is different for both of them, so obviously the returns, they're gonna be different, like the best returns or the best losses. In this case, for the short put, we have minus 22% losses that's observed monthly, which is minus 94.4 analyzed, and minus 6% weekly, which analyzes almost the same. Which is interesting. And as far as the gains is concerned, in the returns, we have observed plus 7% weekly for the short put, and plus 24% for the long call. So annualized, we have like almost the short put is 3 times more than the long call. So yeah,
You
it's
mean the
oh, the analyzed ones. Like when you analyze
why is it
the
7% and 300 to 3,500? Or maybe
weekly,
it's mixed up or not.
sorry,
It looks like 7% weekly. Oh, and 24% monthly. I see. So
monthly.
okay,
Yeah,
multiply by 52 versus
exactly. Yeah.
12.
So if you do the little math,
I see. So again, the what we're showing here is that regardless of your assumption, bullish, bearish, there's a few strategies. The results will not change very much. It's a lot of what we see is long puts will mirror short
mm,
calls, short puts will mirror long calls. Now it's kind of knowing the risks, knowing kind of how to express that directionality is what is kind of the next level of strategies. But yeah, very, 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 very it's also a bit less informed. You just roll without even worrying, changing your strike. So that's something we'll explore in the future. But at the end of the day, we know the max risk, we know the max gain. It's also a data point that you have to keep in mind if you're bullish, bearish, or want to
yeah,
trade.
yeah. I mean, ultimately, like the choice depends just on the directional conviction that one has, or and also like the tolerance for the risk and the drawdown. So it all depends on your personality. Are you more
Yeah.
ambitious
So,
or
and we're trying to also, this is going to be something that may come, but if we want to do options vault, or if we want to facilitate
mm,
these strategies for users, then we have this type of data that can be used to back. So we wouldn't push anyone to go either short put or long call, but then there is definitely kind of ways to to use that analysis to create the strategy that works for you. So overall, I think that's it. But yeah, this was great. Again, the bullish, bearish are two very, very straightforward strategies. Maybe we'll do neutral next time, but there's kind of a whole spectrum. It can be neutral to bearish, neutral, bearish. So at the end of the day, we can change the delta, we can change the parameters, but that is very, very interesting
exactly.
data that people can have. And it's also indiscriminate selling. You can imagine that you can be risk off or reduce your size under certain conditions, increase your size under others. That's kind of what we'll find in the context of this research, because I don't
Yeah,
even know
definitely, definitely. I mean, like so far, so we have tested 4 simple strategies. So long put calls or short put calls. So that's like we have that foundation. It's out there, and it's simple and also to understand because they're very simple strategies. We have no multi lags. More like we use out the money options, and yeah. So looking ahead, I'm definitely planning on expanding this analysis to we can do neutral ones, but also like more complex multi-leg strategies like straddles, strangles, so that they have like a different payoff structure. So it would be definitely interesting to see like how it reacts for the same period as well, since we have like all ups and
exactly.
downs.
And maybe one thing that may be worrisome to some is that on the selling side, on the right hand side, you have these huge drawdowns that kind of eat away at your profits. You do maybe several successful months or weeks of profits, and then one big move wipes you out. This is impermanent loss if you're an LP, but this is kind of a known risk. Another way is to define your risk by a put to create
Mhm.
a put spread. So that's also another way that we can imagine eating away at your premium because you may be paying more, but then you limit or cap your max loss at 10% loss.
Mm.
That's a trade-off that we can also explore a bit deeply. But yeah, this
Yeah,
was great. Thanks very much, Amy.
thank you.
Uh,
And in the meantime, if you have any questions, feel free to ask them in social media platforms or in the YouTube comment section of this live stream that's going to be published. And yeah,
yes, if
and
you
thank
go
you
on
for listening.
YouTube, don't respond to those that seek help with their seed phrases
Yeah,
or that want to get a Binance support person. It's fake, but real comments we do welcome. So, all right, very cool. Thanks so much, Amy. This was great, and
thank
yeah,
you.
we'll do the outro for a little bit. But yeah, if you have any questions, feel free to reach out on Discord, on Twitter. Great. Thank you very much, everyone. See you